Good morning, everybody. Hello, Southern Charm. Sweet Swan and Thistle. Trying to read everybody's names. Monster Mama, Country Maid. Good morning. Good morning. Welcome to Zoe's Treasures. Wander through life with me. Hello. Welcome. My name's Tracy. As always, here with my husband Noel. So today we were going to talk about taxes. I wanted to do it a little bit different, but before we get there, let's talk about. Good morning, Curly Q. Let's talk about what's coming up. Hello, good morning. Next week, my shows are going to be really weird next week because I am going to Mississippi. So, of all places that my 9 to 5 can send me, I am going to Jackson, Mississippi, for a week to go and teach our brand new associates. So, a bunch of I say kids; they're all young adults, fresh out of college. So that's going to be fun. It's actually going and teaching is one of my favorite parts of my 9 to 5 job. So I am kind of excited about it, but that means I'm not going to be doing a lot of shows. Am I going to be close to you? Where are you? Wander through life with me. Teaching adults. I know sometimes it's good and bad teaching adults. They come with a lot more opinions and thoughts. Oh, you're in Alabama. Awesome. Yeah, well, I am going to be very close to you. So adults come with a lot more of their own like opinions and experiences that they want to bring to it. But if you're able to like help make that part of the lesson, then it works okay. Sometimes though, I don't know. These ones are young adults though, so they're a little more eager. This is for most of the people I'm going to be teaching, their first jobs are their first professional jobs out of college. So most of them are like super eager at this point to learn. So that's kind of fun because they're paying attention. Anyways, while I'm in Mississippi, we do have one show and we are going to do this show remotely. So it's going to be one of those ones. My husband's going to be here. If you rarely see him, he is actually going to be showing all the items. I'm going to be logged in remotely telling you about the items. So
oh boy.
So we're going to do it just a little bit different, kind of take advantage of technology. And it is a raid train. So just to make it a little bit more fun, it is a 10-minute fast-paced raid train. So CG Boomerang and JJ Shopper have come up with this idea for a new raid train. It will be fun. And their new raid train is called the Sellout Express Raid Train. I'm going to be on Tuesday night at 7:30. What's really cool about this isn't like your typical raid train where there isn't really a theme. So there's no theme and no giveaways. But what is going to happen is every single seller is going to do dollar starts and free shipping on this raid train, which for me is normal. That's what I do anyway. So I just feel like, this is my wheelhouse. I'm fitting right in on the raid train. But for a lot of other sellers, doing those two, the combination, free shipping and dollar starts, isn't as like part of their normal routine. And I'm sorry, you guys. For you as buyers, this is a great raid train because free shipping, dollar starts. Everybody's bringing their normal items that they would sell, and it's an evening train. So if you're working all day, you could still catch it. I don't know how many sellers, but it's going on for 3 or 4 hours in the evening. So that's going to be a fun one on Tuesday. Friday, normal talk show next week. It is Tuesday at 7:30 p.m. is my slot, but the train goes. I'm like the third or fourth person, I think. Friday, normal talk show. Next Friday, we're going to talk all about inventory. Anything that has to do with inventory, that's a topic for next week. And then one more raid train next Friday night. This one's going to be fun too. This is another CG Boomerang Echo and JJ Shopper one. It is the 12 on 12/12, the final chapter. So if you guys have been following along, CG Boomerang and JJ Shopper have done a numbers raid train. They've done it for 2 years, and this is the final one. This is the last train they are doing, and it's every month on that day of the month. So 1/1, 2/2, 3/3, etc. So this 12/12 is the last one. Well, of course, they don't do raid trains without putting a little twist to it, right? So all of us sellers, there's only 12 sellers on the train. We each have to dress up as one of the 12 days of Christmas. So think, what is it? Partridge in a pear tree, 5 golden rings, lords a leaping, 8 maids a milking. So the 12 days of Christmas, we have to dress up as one. Got my outfit picked out. Actually ordered parts of it from the river.
Yes, Miss Michelle. It's going to be interesting.
Hello, crystals. Whatnot was painful this morning. Uh-oh. And then Jessica says she's so scared of taxes. It's pretty crazy that I pay taxes when I buy items and the buyer pays taxes when they buy it, and then I have to pay again. Sales tax, yes, Jessica. So we'll talk about that in just a second. Let me just wrap up this 12 days of Christmas. I have something all picked out. Come see me. That is next Friday night at 7. As usual, we got some cool graphics going on in the show. Going to try to surprise you. I'm looking forward to getting dressed up. I love the raid trains where you can dress up because I think they're so much fun. Oh, Cloudflare went down again. Oh, I didn't know that. So that's going to affect all kinds of people today. It's going to be a long day. Southern Charm's going to go through all 12 to try to guess. You'll have to come and see the show to see which one I'm dressing up as. All right. So we had a comment a second ago. Today is all about taxes. We're going to do it a little bit different. I actually have a quiz for you guys as we go through the day or through the morning. So we're going to do one question at a time, and then we'll kind of talk about it. But let's answer the question. Somebody said their buyer pays taxes, and they pay taxes, and then or they pay taxes when the seller, all the way through. So that's sales tax. So when we're talking about taxes, so we could just set the stage, there's 3 types of taxes. Sales tax, which yes, you pay sales tax when you buy something unless you have a sales tax exempt resale certificate, and then your buyer pays sales tax again. You don't have to worry about that when you are selling on any of the online platforms. The online platforms will take care of all of that for you, which is wonderful. So Whatnot collects and remits tax on your behalf, so you don't need to worry about sales tax whatsoever when you're doing Whatnot, eBay, Poshmark, all of those, Mercari, all of those online sites. Then you have federal tax, and that's really where our focus is your federal tax. That's your income tax. So we pay personally, we pay for business. And then you have state tax. State tax pretty much mirrors your federal tax, but I don't talk a lot about state taxes just because every state has different rules, and there's no way for me to know all of them. I can give some guidance on them. Most of the state tax follows federal rules, but there are some nuances from state to state. So today we're going to talk about federal tax. Please put your questions in the chat. Any question, always happy to stop and try to answer them. You have an EIN, so you're unsure if I file under that as a corporate or my personal social security number. So Jessica, I am assuming that you are not an LLC because you do not have LLC behind your name. And usually that's one of the requirements is to add that to your name. So you can have an EIN as a sole proprietor. Okay, good. So I'm correct. You can have an EIN as a sole proprietor. All an EIN is like a social security number for your business. So you can still be a sole proprietor. You filed your personal income tax. It's a Schedule C attached to your personal tax form, which is a 1040. And you just put that EIN in there. So the EIN is not necessary. You don't have to have one as a sole proprietor. Sometimes people will get them if they have an employee. Sometimes if they're doing wholesale, they're required. If you have employees, you can have employees as a sole proprietor, but you don't want to put your social security number on their tax form, so you have an EIN. So it's just a tax number to substitute for the business in place of your own. Name some exemptions for sellers. Oh, shipping. Okay, so deductions you can take, all the normal stuff. Of course, there's home office. There's some specific rules. We can talk about that in a little bit. Your shipping, all of your shipping supplies, bubble wrap tape, anything you buy for shipping supplies, all those packing peanuts, your telephone bill, your utilities, your mileage. Those are all some of the most common. And of course, your inventory. Inventory is like the big, usually for most of us as resellers, our biggest expense. Thrift and time, I hope that answers it. I don't push these a lot, but you guys, I do have some PDFs in the buy now. If you're interested, I do have one that goes over expenses and talks a lot about taxes. So they are all created based on my experience, different resources, IRS, and other resources. So if you're interested, those are there. So Jessica says, I have so many deductions. I'm going to take it to a CPA to do it. But if I add them up on Excel, is that absolutely? So Jessica, you make a good point. You guys, CPAs are expensive. I'm a CPA and we charge a lot of money, and we charge by the hour, but that's not just by the hour. We're going to give you our hourly rate, which you're probably going to pay depending on your state and like your city. New York is obviously going to be a lot more expensive than some like small country town, right? But say where I can find those again. I'm not sure what you're talking about. Oh, in the shop. Yes, thank you. They're in the bin. Our CPAs will charge you by the hour, anywhere from about $300 to $700 or $800, depending on their specialty, years of experience, what they're doing for you. But that's an hourly rate. We actually charge, and most of us charge in 6-minute increments. So that means every time I have to call you, you're getting charged 1/10 of my hourly rate. So if I charge you $300 an hour, to make one 5-minute phone call to you is $30. Okay. So there's a Jessica, $300 an hour. So that's a pretty reasonable rate for a CPA. What does that mean for you? Why is that important? One, you got to pay the money if you have CPA. But two, the more organized you are, the more you have your shit together to give your CPA, the less expensive it's going to be for you. So yes, have Excels, have it all totaled out, have it divided by type of expense. You do not need to bring a bucket of receipts to your CPA, because for them to go through every one of them, you are being charged. Do not do that. Summarize your receipts. You can even just write them all down on a piece of paper and put a total. Make it easy for them, and it'll save yourself money in the long run. So I'm glad you brought that up. Let's see. I saw another something pop up here. How to record. Okay, so how do you record everything? So many different ways. And I won't, as a CPA, I don't recommend any one specific like software or anything.
Good morning, Miss Inga.
Hello, Englon. So my recommendation is you find a system that works for you. If you're a techie person and you love different softwares and pushing all the buttons, then maybe something like a QuickBooks, there's other types of software out there, would be great for you. If you're not a techie person and you're just like, I like pencil and paper, then use that system. As long as you're recording it in a way that you can gather that information at your end, that's what's important. So Jessica says, you're married with 3 children. Should we file together? He's a W-2. Absolutely. So if you are married, thank you for your purchase from the bin. There are very few reasons why you would want to file married filing separately. You actually get penalized for filing married filing separately. So if you were married, you have 2 choices on how you can file. Married or married filing separately. That is it. There's some very, 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 very few exceptions. I'm not even going to go into them because they are so extremely rare. You got 2 choices. So if you're married, typically you file with your spouse.
Good morning, Ricky Relix.
Hello, good morning, Ricky Relix. All right, let's do our first question of the day. Now, any topic, can you guys have any questions? Put them in there. I just kind of organized. We have a bunch of questions just to make this a little more interesting than me just chatting and talking to you. So our first question of the day, and you guys are going to put the answers in the chat.
Here goes the quiz.
We're going to throw it up on the screen so you can see it. Do you have to report income even if you don't get a 1099-K? So we have A, B, C, or D here. And as soon as my husband gets it up there. All right, honey. There you go. A, B, C, or D. We have a bunch of you say yes. Do you have to report income even if you don't get a 1099-K? All right, we're getting a few C's. Everybody says yes. So we do know for sure we got to report it. And it looks like everybody knows C is the correct answer. So yes, all business income must be reported. All right. So and it looks like you guys already know this, so I'm not going to spend a lot of time on this. But basically, there's no free income. The IRS wants their cut no matter what. They've got their handout. So you make some money, you got to report it. And this is actually a spot in the IRS that there's a contradiction where there is one publication that says as resellers, and it specifically says as resellers, any income over $300 must be reported. So if you sold one thing, if you start Whatnot, like you're here and you're just checking it out, and on December 31st, you have a show and you sell $5, you know what? You can slide. The IRS doesn't care about your $5 for this year. But once you hit $300, you are required to put that on a tax return. There is another publication that says over 600, but the rules vary slightly. So basically go with 300. If you make at least $300, make sure it's on your tax return, and it'll save you the time of getting in trouble in the future. All right, our next question. This should be an easy one because we just talked about it. Which of the following can be a deductible expense for resellers? Packing tape, bubble mailers, shipping cost, or all of the above? Yeah, you guys got this. See, you are already tax pros. Look at this. All right, all of the above. Anything you spend in the normal course of business to help you produce income is tax deductible. So I sold something. In order to ship that to my customer, I have to buy all those packing materials, right? So coffee, I wish coffee, unfortunately, no, unless you have a dedicated business location and you are buying coffee and snacks for that location. So coffee is one of those. I tell you what, we think that tax rules are black and white. There is a ton of gray area and open for interpretation. Some of us CPAs are very, very conservative, and we are going to like walk way over here on the side of being right. Other CPAs push the line a little bit. Your lunch if you went sourcing. Yes and no. Meals, not necessarily if you went sourcing. If you went sourcing in a town that's like 50 miles away, so if you like drove a couple of hours away for the day, so if you went over 50 miles away and you had to eat lunch while you were out, you could deduct 50% of that expense, but just not a normal lunch. Like I can't go to my local Goodwill and just decide, oh, I'm going to swing by and get some donuts this morning. That wouldn't be deductible. So the rules are a little bit iffy. What about shipping we paid to receive our inventory? Absolutely. Don, that's actually part of your cost of goods sold. So that's part of your inventory expense. You would bundle that in with the cost of your item. I do person vendor shows too. I save the receipt and yep, absolutely. Your in-person shows. Now, all of that mileage that we're talking about here to drive to your in-person shows, to go pick up any sourcing, all of that stuff is keep a mileage log. We are at 70 cents a mile. So it really adds up. When you go to the post office, all of that stuff. All right, let's do another question. So selling your old personal jacket from your closet for less than you paid, is that taxable or not taxable? So we have A, not taxable, it's personal item sold at a loss. B, taxable because you sold it online. Only taxable if it sells for over 600, or only taxable if you ship it. Now, this is pretty relevant because a lot of the clothing sellers start out, a lot of our clothing sellers start out selling stuff from their own closet. So we have a B, we have some A's. We're about half and half right now. Thank you for your purchase from the bin. If you guys are buying any of the PDFs, please make sure you DM me your email so we can get them out to you. All right, it is A. This is not taxable. This is if you sell something that's a personal item, it was bought for personal use, it wasn't bought as inventory to sell. Your old clothes, for example, something you bought to decorate your house before you became a reseller, and it's just something you pull off your wall and you want to go and sell it. That's just personal. You don't have to claim. That's just your personal stuff. You can't take a loss. There's no taxability to it. However, if you sell personal, what if it's a profit? If it's for personal like that, it's considered it's considered like a de minimis, kind of like a one-off sale. You don't have to worry about it. Now, if you go through your closet, say, okay, I'm going to start out and be a reseller. And I go through and I pull out 100 pieces of clothing, and this is going to be my starting inventory. In that case, you need to then value that inventory and bring it into your inventory. So you need to go through every single piece, write it down and say, okay, when I bought this, it cost me $10. If you bought it 20 years ago, if you bought it when you were a teenager and it was only $10 then and it's $50 now, it's still only $10. So the difference is it's in the substance of what's happening. So this is, the not just the name of something, but the substance. So let's just say I grabbed just one item. I want to sell one thing from my closet. No big deal. Don't have to worry about it. I can't take a loss. I don't have to report it. But if I'm going to start my inventory with things that I own from around my house, which is very, very common for us on Whatnot, you walk around and you pick things up. And now when I say picking things up, I'm talking about things that you bought for your own personal enjoyment. They were never intended to be business items. These are things that you just bought for yourself, for your home. And then you say, okay, I'm going to start Whatnot. This is my inventory. You need to then value every single item, and that is your starting inventory. Then that becomes taxable. That no longer you move it from personal to business. So you kind of got to look at what's that substance of it. Am I just doing a one-off item, or am I doing a whole collection of things? Now, when I talk about, and I shouldn't have said collection of things, a whole group of things. Let's talk about personal collections. If you've collected baseball cards your whole life, maybe since you were a kid, and you're like, you know what, this is going to be my starting, or you've collected art, or grandma passes down, I don't know, there's a whole bunch of different ones, and I didn't list it out here. Collectible items. There's a wine collection. Maybe your husband had a wine collection and all of a sudden you're going to sell it. I don't know if you can sell that on Whatnot, but just making an example here. There are specific items the IRS says are considered collectible things. Now, those are valued completely differently. Those you have to claim on your taxes. They go on a Schedule D. They're just the same as if you bought a stock or something for investment purposes. So it gets a little tricky. And this is why I say you need a CPA or you need an accountant to really help you through this. But making sure you keep good records of what's happening, where you got your items, is going to help them at the end of the year figure out what exactly your taxability is on those. All right. Let's do another question. Thank you for sharing this live stream. I appreciate it. What is COGS, or cost of goods sold? Is it the price you want to sell your items for, what you originally paid for the inventory that you sold, your total sales for the year, or the fees charged by the platform? So COGS, or cost of goods sold, is a very common term you're going to hear in your financials. We got a lot of B's. You guys are right. You guys know this one already. So it is B. So your cost of goods sold, or your COGS, is what you originally paid for the inventory you sold. And that, like we said earlier, includes your shipping, includes any tax you paid on that item. It also includes the cost to improve that item. Say you bought something and you need to repair it before you can sell it. If you're a clothing person, say you bought it and you had to take it to a seamstress to make some repairs before it's sellable, that price that you paid to the seamstress should go into your cost of goods for that item. All right, we're just moving right along. If you're just joining us, welcome. If you have any questions, it doesn't have to be to what we're talking, doesn't have to be to whatever pertaining topic we're on at the moment, but any tax questions, feel free to put them in the chat. Like having a jeweler. Yes, exactly, Reiki Relics. If you have a jeweler replace a stone, if you get a ring that you're going to sell, you buy it for inventory, and it's missing a stone, and you take it to the jeweler, that's part of the cost of goods for that item. Thank you for your purchase from the bin. I appreciate that. Anything you guys are buying from the bin, we will get out right after the show this morning, within a couple of hours. Good morning. Oh, thank you, BBA. I enjoy talking about taxes. Normally, on my Friday shows, you know what, sorry. I'm going to do some giveaways. We have 2 postcards for all the giveaways. They're all 2 postcards. Normally, we do like business topics, but every now and then we'll pull out just a straight up kind of tax and accounting, but also open to talk about anything you guys want to talk about this morning. Let's do another one. Which of these is not a business expense? Inventory, your personal groceries, office supplies, or mileage to source? This should be an easy one because we kind of already just talked about this. Yeah, you guys know it is B. Your personal groceries are not. But there is a way to make a lot of personal things into tax deductible items. So you hear a lot of people talk about it. This is a common thing. And I mean, I hear it all the time, and I hear my kids say it, and it kind of drives me nuts. Oh, thank you so much, White Oak. Yeah, I wish our groceries were tax deductible. But there is a way to make a lot of your personal stuff tax deductible. This is the business loopholes that we hear about. So you hear a lot of people, you need to eat to sell. Yes, me too. I need coffee to sell. We were talking about this earlier. You hear a lot of people say, oh, well, corporates have all these loopholes. They can avoid taxes. They have all these loopholes. They really don't. We all live by the same tax laws.
Good morning, hyperfixated mama.
Yes, good morning, hyperfixated mama. There are There are some advantages to being a corporation, but the tax laws are the tax laws, and we can all take advantage of them almost to the same extent. Now, if you're an S Corp or a big C Corp, there are a few things that are available to them that aren't available to us as sole proprietors. But honestly, the things that are available to them, you wouldn't be dabbling in anyways. So we're not missing stuff. There's no special loopholes, right? Schedule business meeting around meal times. There you go. And now that's a way to make, if you do a business meeting around a mealtime, if you're meeting a new vendor, if you're interviewing somebody and you do it over a meal, you could deduct 50% of that meal. So there you go. This is one of the ways. One of the biggest ways, and one of the things I do, if you have a child and the child actually can help in some way in your business. So it can't be your 1-year-old or your 2-year-old. I have a 15-year-old. We sell a lot of Scrabble letters on another platform. They're super popular, and that is her part of the business. Every order comes in, she has to pack and ship it. She has to answer all the emails or the messages regarding those types of orders. She helps me when I go sourcing. She's my muscle sometimes when I need muscle. So she's physically helping me in the business. I don't have to put her on payroll, yet I can deduct up to $13,000 a year for expenses for her payment of her services in my business, tax-free, which means I don't need to physically pay her. I don't have to write her a check. I don't have to pay payroll taxes on it, but I can deduct it from my business if I'm legitimately spending that money. Meals when traveling to source. So we talked about this only when you're traveling more than 50 miles away. So if you're just out for the day and you're sourcing and you run through McDonald's, that's not deductible. You're going to eat anyways. The IRS is like, yeah, you're going to eat anyways. That's not really deductible. But if you're like going 3 or 4 towns over, you're out, more than 50 miles away from your home and you're getting a meal, that could be deductible up to 50%. So one of the big ways is to pay your children. I never pay my daughter directly. Hotel when sourcing, yes, absolutely. Hotel when sourcing for several days. Yep, and that's a good one. Rental cars, airplanes. If you are flying to another city, if you are going to whatnot meetup in another city that you have to fly to and get a rental car and pay for a hotel, all of that is tax deductible because it is around whatnot. It is around your business source, right? Age limit for children. There technically isn't an age limit. It is more, are they of the age that they can help you? Are they physically doing something in your business? So this is one of those gray areas in the IRS. You can't, I can't say my 1, 2, 3, 4-year-old, even I don't know, I would say up to 7 or 8 would be kind of iffy. Are they really helping you? As long as they are a dependent on your tax return. So it isn't really cut off at 18. It's considered as long as they are a dependent on your tax return. As a full amount for lodging or 50%. It is the full amount for lodging. Now, that only includes if you're lodging and it's you and a spouse and 2 kids and you get 2 rooms, it's only the room you're in. That second room for the kids is not tax deductible because that's not necessary. You bringing a spouse or children on a work trip is your own personal enjoyment. That's not business necessary. So just because I hear a lot of people say, and I've heard this on another chat show, let's see who's going to get that giveaway real quick. Reiki Relics, you got those postcards. Congratulations. I've heard this on another chat. It's not even a chat show. It's just a chat show where the person said, oh, I just bring all my kids when I do, bring my whole family. We make this into a vacation. Well, okay, cool for you. You get to deduct the cost of your airline, a hotel room that you're sleeping in, some of the meals that you're eating, but the spouse and all the kids, they're not deductible. That's not needed for the business. Okay, so if my friend helps me and doesn't want pay, no. Yeah, Reiki Relics, you couldn't deduct that. Let's see, what else am I missing? Let's see. I will discuss mileage. Okay, thanks. So you can still use off it for children. Yes, you can, as long as they are doing something that you can legitimately say. If the IRS were to come to you and say, hey, it shows that you deducted $5,000 for each child on your tax return. What did they do for your business? If you can honestly look an IRS auditor in the eye and say, well, my son packs orders, or my son ships for me, or my daughter goes and sources for me, or whatever it may be. They fold clothes, they, put boxes together. If you can legitimately back that up, then yes, you can use them. So long as you can answer it legitimately. Okay. The daughter edits. Yes, perfect. See, daughter edits media posts, and that perfect example. Can I discuss mileage? Absolutely. So, Tanham, all mileage is deductible business mileage. Miles driven for business purposes are deductible at 70 cents a mile. You need to keep some type of a log. The IRS, unless you're audited, will never ask to see your log, but you need to have it. You need to keep a log. It could be electronic, it could be a pencil and paper you keep in your car. It doesn't matter how you keep that log. As long as you're logging how many miles you've driven for that business purpose. I would put 3 things on there: the date, the miles, and what the purpose was. So you don't have to be like a huge description. It could be sourcing, Goodwill sourcing, dropping off packages. Something very simple like that is all you have to put. And then at the end of the year, you can add all that up and it is worth 70 cents a mile. So if my husband and I sell together, are both of our, yes, a monster mama, if both of you, like me and my husband, are both heavily involved in the business, we have, besides just a vested interest, he's here at every show. So yeah, we are a team doing this together. If your husband just occasionally comes in and says hi in the screen and does something funny and walks off, that's not really involved in the business, right? Again, it's a gray area. I said this at the beginning. There are a lot of things in the IRS that's kind of this gray that you have to figure out. Are they really involved or not? And I go back to the easiest way. Could you honestly look an IRS agent in the eye and explain what you're deducting on your tax return? If you can, then you're good.
It's total miles. So from your place of business to the post office is 15 miles, and you're going to go there and back, then that's a round trip of 30 miles. If you're going to go sourcing and it's over an hour drive, then however many miles you go from your place of business to wherever you're sourcing or picking up your merchandise, that's a round trip. That's the amount of miles that you have to log. It's not about starting and ending miles. It's about the total miles.
And they don't care about just starting and ending. Just write down 10 miles, 15, 20, whatever it is. And it adds up really quick, you guys. It adds up so fast. If you are not keeping your mileage, go back and try to recreate it for this year. So let's see. Crackshot Karen says she has a notebook. Yep. So let's see. I am using, so Engelon says you're using a full garage, patio, wonderful living room, and a home office to do your business. Basically, are 40% of the house, and I have an S corp. So Engelon, the rules with an S corp are slightly different than than a sole proprietor. However, that business space can still be deducted on your S corp return. So because you have an S corp, that's going to be a form 1120S. It's a totally whole separate tax return that gets filed for your S corp, and then your S corp gives you what's called a K1. That K1 goes on your personal return. So everything we're talking about really goes on your corporate return. For all the rest of us that are sole proprietors, they go on our personal return. But a lot of the same stuff that we do as sole proprietors are and S corps. All of the basic rules are the same on what's deductible.
Miss Echo.
How do I deal with that for tax deduction? Oh, okay, so that's what we talked about. Okay, so we just answered that. Can you simply put number of miles? Yep. Yeah, so we answered that, just the number of miles. I need one setting it up. They'll tell you to enter your vehicle and starting mileage. Yes. When you go to do your tax return, they're going to ask some information about your vehicle. Don't be scared about it. Scrap Spazzy, you got that giveaway. Congratulations.
Congratulations.
Let's see here. Do I need to pay documented rent by an S corp? That's a good question. If you're using your home office, you should not. You should still be able to claim some of that. They may do what's called imputed rent. So there's a term, and this really doesn't apply to most of us. So if you're here listening, this is kind of a S corp type thing. But there's a concept with the IRS called imputed rent. So if you're renting property and you're not paying the market value, we make up a market rate to put on a tax return. It's not fake. It's a legit IRS thing that you have to do. So I'm guessing, without knowing all of your specifics and seeing all of your numbers, I'm guessing your CPA is probably doing some type of an imputed rent for that as a deduction on your corporate tax return. Having QuickBooks. So yep, BBA, that's it. QuickBooks is great to use. Do you recommend to find a CPA with bookkeeping together or use bookkeeping in one company? I would say do them together. It is highly, if you find, and pretty much they'll set it up for you. If you find a CPA, most CPAs, unless they're just like a single person working on their own, a single CPA, most CPA firms have bookkeepers employed. And when you go and you kind of like enter into a business agreement with them to do your taxes, they're not going, I'll tell you what, that CPA is probably not the one doing your tax return. The bookkeeper is probably the one doing it. Then the CPA reviews it, goes over, makes sure everything's correct. So if you have a bookkeeper that's keeping your stuff monthly, I would do it all in one firm with the CPA office. You're going to get better rates from them. They'll probably give you more of a package deal or like a monthly fee versus like these hit or miss, like one-off things.
Shop with Shells. Yes, we try to discuss taxes on every chat show we have, and you can always revisit the previous shows on YouTube. Here's the YouTube channel.
So yeah, you can always see, I have some specific tax shows. So I used to do just tax shows. Now I kind of moved them to my Friday shows where we'll talk business and taxes. Every now and then I'll throw a topic on here like today where it's like, hey, this is really heavy tax related. But yeah, any Friday, I'm always here Friday mornings at 7 and happy to answer any questions on that. Can you recommend the best software for jewelry inventory? I cannot. I don't like recommending specific softwares. Now, I've used some. I can tell you stuff that I've used. But I find that in order to keep inventory, to keep your accounting records, it has to work for you. So you need to find something that if you're techie, it could be a high-tech program. If you're basic and you just like pencil and paper, you can do it that way. As long as you are capturing the four main things for inventory, it doesn't matter what you use. Use something you're comfortable with. You need to know what your starting inventory is, what came in, what went out, and then what the ending inventory is. As long as you're using something that captures those four pieces of information, you're good. I heard a part of writing off kid stuff, but what can I write off for the husband helping for free business, shows, shipping, etc.? Not a lot for your husband. There are some IRS rules, and I don't have all the specifics in front of me, but there are some rules where you can pay medical expenses for a spouse who's working in your business tax-free. So if that's something that applies to you, if your spouse has high medical expenses or even just, considerable each month, talk to your CPA about that. Where would I look for the best CPA to understand the world of a reseller? Any recommendations? I do not have recommendation. I think you're down in Florida, if I remember correctly. So I would look for a local or a regional firm. I know some in Jacksonville, Florida, but I don't know much in South Florida. But if you search just Google regional or local CPA firm, they don't necessarily need to know reselling. As a CPA, we take 4 tests. Those tests cover taxes, laws, accounting, regulations. We have to be knowledgeable on a broad area of subjects. So we don't necessarily need you don't necessarily need a CPA that specializes in reselling. There's nothing so particular to reselling than there is from somebody from a retail, a brick and mortar store, or even a service business from the plumber. Now, this sounds weird, but there's not, when it comes to the world of accounting and taxes, what I'm doing as a reseller isn't that far off than what a plumber's doing. When I'm thinking about how do I record income, how do I record expenses, and what's tax deductible. So just finding a good one. Now, I do recommend, because reselling, particularly online and with the technology, there is an age gap. There's like this difference in ages, right? If I wasn't a CPA myself, I probably wouldn't go looking for the 60, 70-year-old CPA about to retire to do my online reselling taxes, right? Just because, unless this person was some technology guru, only because if you just think a knowledge-wise, like in the experience-wise, a CPA, and I hate to put age limits on this, but maybe somebody that's on the upper side about to retire hasn't used the technology, isn't so as familiar with live selling. Live online selling hasn't been around that long. So maybe you want to look for a CPA that's, been a CPA for 5 to 10 years, a little more in tune with social media and stuff like that, only just because that's general knowledge, right? There are CPAs too that'll specialize in manufacturing, whatever. So you don't want one of those. but they don't necessarily have to be reseller CPA. All right. Let's see, what else am I missing here? Let's try to catch up on Reseller Genie. So that's that's a program I've heard really good things about it. I've never used it myself. Is there an app that you can use to scan receipts to keep track of them? Burlap Barn. Actually, there is. So I know for a fact QuickBooks does it. And if QuickBooks has it, I am sure other ones probably have the same type of software, especially in today's, like the way technology is today. But I know for sure QuickBooks because I've used that one. Let's see. Can you settle a debate? Okay, I'll try. What's the rule on how many years your new business can lose money? Is it two? There's no such thing as how many years your business can lose money. It is about, is your business a hobby or a business, or is what you are doing a hobby or a business? I actually have a PDF that really walks you through. The IRS has a set of factors that they look at. If I remember right off the top of my head, I think there's like 11 factors that they look at to determine, are you a hobby or are you a business? Each one is taxed very differently. And what you can deduct is very different on each one. There is one of the factors is, have you made a profit in the last 2 to 3 years? That is a factor in a set of larger factors to determine. So I don't know which side of the debate you're on and if I helped you or not, but someone told me, okay, wait, if someone told me there's a keep track of receipts. Yep. If Whatnot collects a state tax, do we also have to pay state tax in the state we sell in? So Whatnot does not collect state tax for you. Whatnot collects sales tax. So sales tax is remitted to the state, but sales tax is completely different than state tax.
The PDFs are in the buy it now. Now, if you're buying the PDFs and you're buying bundles, please send us a direct message, a DM with your email address so we can send you the actual files.
Yep.
And tell us which ones are the ones that you're interested in.
Thank you. So Whatnot collects sales tax. Don't worry about sales tax. They do it for you. Just put it out of your mind. One less thing for us to stress on. State tax, if you live in a state that you have to file your state return, you're responsible for that, along with your federal tax. There you go. So Forgotten Memory says, Amazon posted a loss for over a decade. So thank you. That kind of supports what I was saying earlier. And we talked about the PDF. How can you find out the factors? I actually list them on I have a PDF that's Hobby vs. Business, and I list them there. You can also Google, go to www.irs.gov, and then in their IRS search bar, put Hobby vs. Business. And their publications will come up, and you can read it right straight from what the IRS has to say. Oh, you think you're both around scrap stressing? Okay. Do you recommend you get it? Oh, look at this. All right. Burlap Barn. Let's do our next question because that relates to you. So let's put our next question up. Let's see what everybody says, and then I will talk about it. So true or false? Do you need an LLC before you can sell online? What do you guys think? B, false. All right. Yep. Everybody says false. Okay. So let me go up. I know I'm missing some questions. So Burlap Barn, to answer your question, I do not recommend an LLC unless the specifics of your business and your goals and your strategy and all of those things around you indicate that would be an appropriate choice. You do not have to have one just because you're a reseller. Absolutely not necessary. There are legitimate reasons why you would want to get one. Some of those reasons could be, do you have partners that aren't related? Like, that's not your spouse. Is your cousin or your best friend your partner? Thank you, hon. I see that. Do you have a partner? Do you plan to get partners in the future? Do you own property? Do you have employees? There's a whole bunch of questions. Talk to a CPA or a financial advisor, and they are an attorney, and they can help you look at all of those factors and determine if an LLC is an appropriate step or not. Hubby was talking, I couldn't hear what you said about hobby versus business. So White Oak, there are a whole bunch of factors that the IRS has outlined that will tell you if you are a hobby or a business. So you go through and you look at these factors, and you're going to figure out if you lean one way or the other. Spoiler alert, most of us think we're hobbies, and we're not. We are a business. For most of us. All right, so that's my whole spiel on a LLC. I have a business license in your county, but sell solely on Whatnot. Scrap Spazzy, you're going to have to look at all of those factors. Just because you have a business license doesn't mean necessarily that you're a business. Again, it's like a big picture. It's not like a line, like a black and white one question. You got to look at all of these factors and determine it from there. Oh, thank you so much, Aaron. Okay, let's go on to our next question. Are you ready, honey? Throw our next question up there. Who handles sales? We talked about this. Who handles sales tax on platforms? You, the platform, the buyer, or no one? This should be easy because we've just talked about this like a million times already in the show. Yep, B. The platform collects it. You don't need to worry about sales tax. All right. Let's go on to the next question then. Let's go. This is one I don't think we've touched on yet. What is the $100 PDF about? Okay. How long should you keep receipts and tax records? So we have a year, 3 to 7, 6 months. Put in what you think. Oh, while you guys are putting that in, the $100 PDF it's actually free. Don't buy it. Just DM me that you want the Whatnot Tools PDF and you'll get it for free. I have to list a reasonable cost. Whatnot says our items have to be in a reasonable cost. So
send us your email address through direct message so we can send you the PDFs, the ones that you buy and the free one too.
Okay. So you guys are right. 3 to 7 years. That's the common time frame that you want to keep your records. So 3 to 7 years. And you don't need to send the IRS your records. Like you're sending a tax return. But you want to keep your receipts, keep all your documentation in case they come back to you and say, hey, we don't understand this. You get audited. You have your proof. So I contacted my seller sales tax exemption. Okay. And I was told I had to put up a $500 bond. I think I'm going to go to LSA because it's only $50. Lady Magnolia, I'm just curious, what state are you in? I have never heard that you have to put up a bond. That it could just be a state I'm not familiar with, but that's new to me. Just think, one of the things about having an LLC, and I'm not against LLCs. There's legitimate reasons why an LLC is the absolute best choice you can make. There's legitimate reasons why it is also not the best choice. But one of the things with an LLC is you are forming a corporation, a limited liability corporation, limited liability company, right? You're forming a separate business entity separate from yourself when you form an LLC. Right now, as a sole proprietor, if today I decided Zoe's Treasures, I'm sick and tired of this, I'm done packing my last box, I'm over this. Mic drop, walk away, you're done. If you're an LLC, it's not that easy. If you are an LLC, you need to dissolve that entity through the state that you filed. You need to let the IRS know. You need to file a final tax return. Like there's a lot of stuff in an LLC. So it's just one of those things that don't take it lightly. And it's my soapbox because you hear it so often. Oh, go do an LLC. Go do an LLC. It's not always the best decision. Why is there a large spread? Is it 3 to 7? There are different tax circumstances that they can go back a varying number of years. So that's why it's 3 to 7. So typically most things they can do a 5-year look back, but there are limited circumstances and certain scenarios that the IRS can go back further than that. So that's what we say 3 to 7 protects you. What if you did an LLC but haven't used it? You're still an LLC. Until you dissolve it, you're still an LLC. So one of the things I say about LLCs all the time, as far as tax goes, if it is you are a sole proprietor, you're just a single member LLC. Single member can also be you and your spouse, because remember I said before, you file a joint tax return, you're considered a single member. You know what tax form you're using? Schedule C, the exact same tax form you use as a sole proprietor. So there's no difference. Now, if you're an LLC, you and your cousin don't file a joint tax return, then you have to file a whole nother tax return, get a K-1, and then file your personal return. I have an LLC for different business for my reselling, and I filed separately on a different Schedule C. Correct. Yes, Chris. Yes. If I have an LLC for a different business, then you're reselling. Correct, Crystals. If you have something completely outside of reselling that you have a schedule or an LLC for, you would file multiple Schedule Cs.
Hey, Corey, good morning.
Good morning, Corey. How are you?
And Lady Magnolia, if you missed the first part of the show, you can always go back and watch it on our YouTube channel. I'm displaying it right there on top.
All
But
right.
you're welcome to stay and ask any questions.
Okay. We're going to go on. Let's do our next question. Wait, hold on. Are you allowed to carry over losses in certain circumstances? So without knowing, there's certain questions I can kind of just give you a general answer because there's so many specifics to each individual circumstance and what the loss came from. Is it passive? Is it active? In certain circumstances, you are allowed to carry over losses. In general, when you take a loss on a Schedule C, in general, no, but there are certain circumstances you can. Do you have to alert your CPA to issue a 1099 to the amount of money you pay out if you sold for someone? Yes, you do. So if you sold for somebody else, or you had somebody work for you that was not on your payroll, that was like a contract worker, yes, you do. You need to let your CPA know, and they need to issue that. I want to say they have to issue it by the end of January and maybe February. And if they're late, there's fines for it. So that's one of those things you want to make sure you're talking to them early on, like now, if not early January.
Thank you.
Thank you, Scrap Fuzzy. All right, let's go to our next question. Let's take a look at the next one. Oh, not that one. We did that one. If you use your personal PayPal or Venmo for business sales, what happens? Nothing, doesn't matter. B, you won't be taxed. C, it becomes harder to separate business versus personal, or the IRS will automatically audit you. That's a scary D, the IRS audit, that's scary. All right, I'm seeing a lot of C's, and that is the correct answer. So you will still be taxed, but all it means is that you're now commingling and mixing up your business and your personal funds, which is never a good practice to do, ever, ever, ever. Let's see, did I miss something? I know this is being my first year that we will have a loss just due to inventory and purchasing shelving. Yes. Now your inventory, you only expense your inventory when it sells. So if you're sitting on a bunch of inventory on December 31st, and then now it's January 1st of 2026, that inventory that's still in your possession, you don't get to write that off. I say that. Let's just talk about inventory really quick. Next week, we're going to dive deep into inventory, all things inventory. But really quick, the way inventory works, there's two ways to do it on your tax return. You have cash and accrual. I never recommend you writing off all of your inventory from a CPA perspective. It's a bad accounting practice. They have it on the IRS, on your tax form. You can write off all of that inventory. However, you're going to end up hurting yourself in the long run. If I buy $10,000 of inventory in 2025 and I sell $2,000 of it, okay, so I only sold just a little bit, a fifth of it, okay. If I'm doing accrual accounting, I'm only going to write off the inventory that's sold. So I'm going to have $8,000 still sitting as an asset to carry on to 2026. However, if I use the cash method, I'm going to write off all $10,000 of that inventory. That $10,000 is going to be an expense on my tax return, and it's going to look wonderful this year. It's going to be great for you because you're going to have this huge, big expense to take off of your income, right? But you only made a little bit of income because you only sold $2,000 worth of it. So you didn't make all that income. So you're going to have this big loss. But you're carrying over $8,000 of inventory to the next year in 2026. And in 2026, you're going to sell that inventory. And now you have nothing to write off against that inventory. One, it doesn't give you true accounting. It just doesn't. There's no way to match up your income and your expense together. So your books look funny. You can't make good decisions based on that. It's allowable, but I don't recommend it. So the carryover loss, you can give an example of when it is not. I cannot right now because those rules are so specific that I would want to go and look that up and talk to you about it. Don, if you want to shoot me a quick message so I remember that you're the one who asked the question, just message me really quick right now. I will go look it up and I will message you either clips from the IRS publication or something to answer your question. I just want to make sure I'm telling you right and it's not something that I've read like in the last couple of days. With the accrual method, will it accept that the inventory cost accrued in the prior year tax? So, yeah, so in the accrual method, you're not expensing that inventory at all until it's sold. So if you have inventory that sits for 5 years, the IRS can care less. You are never expensing it until the day it sells. Basically, all that happens is I have $1 here. I'm taking this $1 and I'm going to trade it for this mouse. They're both assets. They both are on my balance sheet. They are not an expense. They don't reduce my taxable income whatsoever. I'm trading $1 for something tangible. That's all I'm doing. Then when I sell this tangible item, it moves down here to the expenses. Then I deduct it as an expense. That matches the revenue I book and the expense together, gives you a more true and accurate picture of what's happening in your business. But I wanted to make sure I mentioned both in case your CPA says, well, we can write all of it off. You can, but if they say we're going to use the cash method and write all of this off, just ask what those implications are. Making sure that you're talking through what's going to happen in your business. If you're like, look, next year I'm going out of business, this isn't a big concern, that may be the right choice for you. And this is why I say there isn't a one size fits all for taxes and accounting. You need to get a CPA and look at all the specifics. As resellers, and most of us are sole proprietors or single member LLCs, it's not just our business. It's our personal lives. What's happening in our personal lives? Do we have kids going to college? Did we buy a house? Is there a new baby coming? Did we get married? Do we have another job? Is that income going up or down? There's all these personal things that mix in with what's happening in your business to create this big tax picture. So getting a good CPA to look at all of that for you and help you plan appropriately is vital. How does it make sense to put your spouse on a payroll if they're doing does it make sense? Absolutely. If you are doing a payroll, especially England, if you are a S Corp, definitely. And the only thing is you're just paying them a paycheck. You're paying the withholding, or you're withholding from them. You're matching their Social Security, Medicare, put them on payroll. I would assume, England, that since you are an S Corp, that you are actually receiving a paycheck from an S Corp, because S Corps have specific rules. Yes, S Corps have specific rules about payments to the shareholders in an S Corp. An S Corp is a tax election, so it is a corporation, and then through the IRS, you elect to be an S Corp, which just means that you're taxed differently. They file a different tax return. They file, I want to say an 1120 is the tax form, if I remember right. It's been a while since I filed one. And they get a K1 that goes on their personal return. Whereas as a sole proprietor, we file a Schedule C that's part of our personal return. So an S Corp is just an election made through the IRS. I missed something up here. My husband's telling me, let's see. I started in 2024, 250, and started 25 with 55. So then that means you have what? I can't do math in my head. 185, 195 pieces that you have sold. Are you sold in 2024? And if he's 50% shareholder, then we both get a paycheck. So 100%, England, exactly. That's it right there. No. And S Corp also allows you, just not that this is happening for most of us, but one of the reasons people do elect S Corps is because it allows you to have shareholders, like a multiple number of shareholders. So it's just a business structure that allows, I can have 15 or 20 different shareholders. I can have investors. Again, there's no one size fits all. You need to get a CPA, financial advisor, and they look at everything, like I was just saying, personal, business, where you're going, where you've been, what life changes are coming. They kind of look at all of this and help develop a plan for you and help you design what's best. Does Whatnot report the amount you make after fees, or do you need to include it in your... So they report gross before fees. So everything, what you're going to get from Whatnot is before fees. Then those fees are an expense to you. So they're listed on your as an expense. Do you suggest hiring a tax strategist independently of your CPA? You could, a financial advisor. I would say your CPA should help you with your taxes as to strategize tax, but a financial advisor too. depending on where you are in your income level, and I'm not asking for you to tell me, but just depending on where you are and what type of investments you have, I would say a financial advisor. Most CPAs have connections with financial advisors. They could probably recommend really good ones for you. The larger CPA firms may even have financial advisors as part of their firm. I know we did when I worked at a regional firm years ago. Can you take income as a dividend? You cannot. So there is no such thing as a dividend when you are a sole proprietor. When you're a sole proprietor, you pull money out. The IRS doesn't care that you pulled money out. Pull all the money out that you want. You never have to report what you pull out as a sole proprietor. The IRS, with an S corp, no, with an S corp it's a little bit different. There's an owner's draw. S corps don't do dividends. Corporations do dividends because then they have to be voted on by their board of directors. S corps do distributions, which there is a part of your K1 that is reported on, but you don't do dividends as an S corp, and you don't do dividends as a sole proprietor. As a sole proprietor, take out all the money you want. The IRS doesn't care. What they care about is what is that net profit at the end of the day, and are you paying taxes on your net profit? All right, we kind of already talked about this, so let's just do this question again. Yep, next question. We kind of touched on this already. Which situation, oh wait, no, we didn't do this. I skipped a question. Okay, which situation requires estimated quarterly taxes? You have a 9-to-5 job and a side hustle, or you only sell personal items, or you expect to owe more than $1,000 in tax from reselling, or you get a 1099K. So when would you have to pay estimated taxes? All right, we're getting a few C's, and that is the correct answer. There's a little more nuance to this, but in general, if you expect to owe $1,000 or more in taxes, then you should be paying estimated taxes. So I did a whole show on this. I'm pretty sure it's on YouTube. We did a whole show on estimated taxes. I also have a PDF that talks all about estimated taxes. But basically, if you expect to end this year owing $1,000 or more in taxes, hopefully you've been making some type of payments throughout the year. What are there CPAs that specialize in online whatnot type stuff? We talked to one that was clueless. They don't necessarily. So Scrub Spazzy, I kind of addressed this earlier. So those of you who may not have been in earlier, because I know we come and go, and that's totally cool. A CPA doesn't necessarily have to specialize in resale. There's no special tax rules. I know there's a chat show person out there who says, you're a reseller, there's special tax rules. I've heard this person say it. It drives me freaking insane. There are no special tax rules for being a reseller. End of discussion. We all follow the same tax rules, regardless if you're making widgets or you're selling online. However, they don't have to specialize. Now, if you find one that's absolutely clueless, go find another CPA. Most of us are versed enough. A business is a business. We look at expense, income, our income, expense, liabilities, assets. So you don't necessarily need one that specializes. This is why it's important to keep track of profit and loss through the year. And so you exactly, Christels, so you know what to expect with taxes. I did a show a couple of months back, I don't know, around September timeframe. Y'all should already know where you stand. At this time of the year, December 5th, you should know where you stand with taxes. You should have already met with your CPA. You should be planning for year end. Is there anything you need to do between December 5th and December 31st that will benefit your tax situation? Is there anything you should not be doing right now? Should I not be spending a lot of money because it's not going to benefit me? Or do I need to make some big purchases right now? You should know all this already. And the only way to know this and to be able to be accurately and ready for your year end is to, like Crystal says, keeping your records all year long. There is a special tax code that we use for our business as a reseller. Reiki Relics, you are referring to I think you're referring to a sales tax exempt license or reseller license where you don't pay sales tax on the items you buy because ultimately the end user is going to pay those sales tax. It's not necessary. You can have one, you cannot have one. And those are usually applied for through your state. Now, some localities, depending on where you live, some localities require a business license. Has nothing to do with taxes. I couldn't tell you who those are because there's just no way for me to know all of them. Oh, and IRS, you're talking about the It's the SCI, I think it's SCICS code. Yeah, so there's like a number code that goes on your Schedule C. I wouldn't worry about it. Whoever does your taxes should be able to do that. And if you do them on yourself, if you do your own taxes, like using TaxAct or TurboTax or whatever, there's usually a drop down there where you can search and find reselling for there. Let's see. I have a 9-to-5 job. So this is from Amy. I have a 9-to-5 job and I have a few extra dollars taken out for taxes. So smart. Due to life changes, just a little. Absolutely. So Amy, this is one of the, I don't want to say tactic, but one of the methods used to help cover your tax liability. For those of us that have our 9-to-5 job and we also do whatnot, instead of making estimated tax payments, because the IRS doesn't care how they get the money. They just want to make sure you're paying in enough throughout the year. Okay. The IRS doesn't want to wait till the end of the year to get their cut. They want it in nice equal installments, right? So one of those ways, if you're a W-2 person and whatnot, is to increase what's being withheld from your W-2. Perfect strategy. Would you recommend using TurboTax as a reseller or pay the extra for a professional? That just depends how comfortable you are. I think you should always, at least, if you don't pay for a CPA on a regular basis, if you're like, I just don't feel that I'm there yet, I don't feel my business needs that right now, that's fine. I would say maybe meet with a CPA every couple of years to reassess where you're at. And if you're comfortable doing TurboTax, by all means. There's so much information out there that you guys, I really think most people can do TurboTax, most sole proprietors. Now, we've talked a little bit about like Ingalon has an S Corp and stuff. When you start getting into that situation, I would highly recommend a CPA. But for most of us that are not an S Corp, sorry, a sole proprietor, I just believe in you guys. I believe we're all smart enough people. We're out here running businesses, right? We must have some brains. We could probably do our tax returns with the help that's there. And then if you get into it and you're like, oh, I'm not really sure, and you start feeling uneasy and you don't know, then go consult with somebody. All right, let's do another question because I think I'm caught up on questions there. So let's do, what's this one? Okay, we talked about this. Can you deduct items you purchased to resell but didn't sell yet? Yes, no, they stay in inventory. C, only at year end. And D, only if you donate them. Yeah, we talked about this. You guys instantly are throwing B's in there. So yeah, we touched on inventory. And next Friday is going to be all about inventory, not just taxes and inventory, but anything we want to talk. How long should we hold our inventory? How many times should we show our inventory? We're going to talk all inventory next week. All right, let's do another question. True or false? If your business has a loss, you can sometimes use it to reduce your taxable income. What do you guys think? Yeah, you're on top of it. This is actually a great strategy. For those of us who maybe have a W-2 job and we're making a very nice salary, and then we do whatnot, your side hustle could just be your tax savings plan. I don't know about you guys. I'll be very transparent without giving numbers. Me and my husband are both professionally employed and like a loss leader, like a loss leader. We're both professionally employed. We pay federal, state, and local tax in our great state of Pennsylvania. And we pay a considerable amount in those taxes every year. In order to reduce that, I take advantage of losses I have in my business. And again, if we go back to the basic concept, so those of you who haven't seen this, some of you are like, Tracy, you say this all the time. Some of you may not have seen this. January 1st, you start like this. This is your book income. This is your tax income. What you want to do is make as much money as you can on your book income all year long. And then on your tax income, you want your tax income to be way down here. Why? We want to pay the little amount of taxes we can, and while making the most amount of money that we can. That's where a good CPA helping you strategize is going to do that. This is one of those things, is using your business to offset some of your other type of income. I know I'm at a loss from cost versus revenue. There you go. Is there an app for accounting inventory that connects to whatnot? Mod Vintage. So Vendoo connects to whatnot. Vendoo is not necessarily an inventory app. I have found it to be very useful to record my inventory. Now, it's only useful if you, to me, I would not recommend it if all you're doing is randomly pulling and showing stuff on Whatnot, not worth it. If you list on other sites, you can use it to list on other sites and also to be somewhat of an inventory record. I have found it to be very useful in that form. It is not what it is made for. But there are, if you just Google it, I am sure there are inventory apps. I do not know if they connect to Whatnot. I'm assuming there's not going to be a whole lot yet because Whatnot is so new. We're only, 5-6 years into Whatnot, if that. So I think in the future, we'll see more and more of that. Okay, we touched on this question too. Let's do this next question. What makes your reselling activity count as a business instead of a hobby? Now, we talked about that there's a bunch of factors, but in general, what do we think it would be? A, you enjoy doing it, you do it more than once a month, you intend to make a profit and act like a business, or you have an LLC. That's right. Everybody knows it's C. The factors that we talked about, they all kind of boil down to if it looks like a business, acts like a business, then you're probably a business. Kind of like if it, looks like a duck, walks like a duck, quacks like a duck, it's probably a duck. Same thing. So all of those factors that we talked about we didn't actually talk about the factors, but the ones that I mentioned that there are factors, they all kind of point to the general concept. If you are doing this as a business, like you're trying to make money, you're keeping records, you're buying inventory, a lot of these other different things, you're probably a business. Of course, I would use a duck quote. Of course. What else would I use? All right. Just came in, so apologize if this is redundant. That's okay. Easiest accounting software. I'm doing better than expected and have been using paper. I don't recommend any specific accounting software. QuickBooks is easy to use. QuickBooks is made for your general person that maybe isn't familiar with debits and credits and all the accounting terms. So they make it very user friendly. Somebody put, what was the other ones? Reseller Genie, somebody mentioned in the chat earlier. So those are two of probably the most popular ones that are out there that are reasonably at a reasonable price. My Reseller Genie, thank you, Scraps Fuzzy, is another one. I've never used it, but I've heard a lot of people recommend it. QuickBooks, they tried to make it user friendly. I don't like their online version. I am old school, where you used to have to download it. Like, okay, I'm so old that we used to go and buy a CD with QuickBooks and load it onto our computers. I've been using it that long. You're that old too? Okay, good. No, I don't feel bad. All right, let's do another question. Are platform fees, like Whatnot seller fees, deductible? We have mainly C's. Yes, they're a business expense. Absolutely. 100%. You guys are correct. When you get your 1099K, I'm going to do another giveaway too, because I've been wanting to do them all morning and I keep forgetting. When you get your 1099K, it is gross. It is not net. It is not after your fees. It is the gross amount. It is when you sell something for $10, it's $10. So it's all those gross amounts added up. Shipping is an expense too. Absolutely. Those of you doing reduced shipping and you're paying the extra, that's a business expense. You should be recording that on a regular basis in your books. Whatnot doesn't make it easy. As an accounting professional, Whatnot, please do better with it's not, it's there. You can get it, but you got to dig a bit. So, reduce shipping. Anything over that $9.21 or $5, whatever the amount you set that you pay is deductible. You guys know when I'm talking about on a computer. I don't know how to do it on a phone, but on a computer, when you go to do your shipping, across the top of that page, it says like seller paid shipping, and it'll show you a number immediately of what you paid. That number is not your total shipping that you're paying. That's only a portion of the shipping that you're paying. So make sure you know that. The number that you see on your shipping page when you're in your seller hub along the top of the screen is only what was deducted immediately during the show. So let's take a step back and think about how me too, Southern Charm. I wish they would fix that. Let's think about how Whatnot works. When you're a buyer, and let's just say it's buyer pays all shipping, you're buying on Whatnot. The minute you swipe and you win an auction, Whatnot charges your credit card for the cost of the item, the shipping, and the taxes, right? Immediately. The same goes as on the seller side. If I'm doing free or reduced shipping, the minute somebody wins something, my buyer's not charged that shipping. I'm charged that shipping immediately. That's the shipping that shows the expense that shows on your shipping page. Now, when you guys then go and you're doing your boxes and you've used your free adjustments and maybe you have to do another box and Whatnot charges you. And it says, hey, Whatnot will pop up and say, hey, this changing the dimensions, doing whatever, it's going to cost you $4.86. And you got to click OK. Then you do generate label and it's going to ask you again to make sure that you know you're about to be charged. You hit OK again. That's when that other $4 and something goes to your ledger. So if you're trying to accumulate how much shipping cost you for a show, start with what's on your shipping page because that's what Whatnot charged you during the show. Then go to your ledger and add that in because that's what's charged while you're doing your shipping. Yep, show promotions are also a write-off. That's like a marketing expense. So I just want to make sure that you guys knew that there's two spots. It's not just that one number. When you're adding it, does Whatnot send us a 1099? They absolutely will send you a 1099 if you have exceeded the threshold. The threshold is $20,000 in sales and 200 transactions. As long as you've done both of those things, you're going to get a 1099. Now, they may not mail it to you. I think recently they published something for if you do it through Stripe, you basically go into Stripe and pull it down from there. It's all electronic. But yes, if you've 20,000 in sales, 200 transactions, you will get a 1099 from Whatnot. Okay, let's do the next question. And when we promote others, where do we find it to expense it? Promoting others is a tip, and that's not always a business expense. We'll talk about that. I'm going to answer these. We'll come right back to those questions. Let's do this one first. Which trip can be deducted as mileage? Going to get your coffee, going to Source, taking the kids to school, or driving to a friend's house? Yes, B, everybody knows driving to Source. Now, if you're like me and you live out in the country, do things the smart way. Even if you don't live in the country, be smart. If my house is here, my kid's school is here, and Goodwill is here, guess what I'm doing? I'm making my Goodwill trip the same time I'm dropping my kid off at school. Now driving to my kid's school has become deductible because it's from my home to Goodwill that's deductible. If it just so happens that Dunkin' Donuts is in the middle or Starbucks is in the middle between my home and my Goodwill, guess what? My drive to get my coffee also just became deductible. But you got to be smart about it. You can't go out of your way and then count that. Okay, let's go back to these questions. Do we count giveaway expenses too? Yes, absolutely, Amy. All giveaway expenses are deductible. I do want to go back, see who won this. Times a Teking, you won that giveaway. Congratulations. I do want to go back to say when you promote others, you're just giving somebody money. Why is that a business? How do you justify the business expense on that? If I was an IRS auditor, I'd question that. Because if I just like go walk down the street and I see some guy and I'm like, you know what, I really like you. You're really good looking and I just want to like give you $10. Or you go into a store and you're just like, you're really nice. Oh, you're just you're just so great. I love your personality. Here's $10. It's not deductible.
Amy's Treasures, the answer to your question is yes.
All right. Lady Magnolia says, with accrual method, you run items that, oops, oh man, my chat just like went crazy. Let me go back up and find this. Okay, come on. Oh, I lost it. What happened with my chat? It just disappeared, the question. Can you put that back in there, Lady Magnolia? I am sorry. It just, the chat just totally disappeared. Do you have it? Can you read the question to me and I can try to answer it? Okay, my husband will add it in. I'm going to skip to the lost ledger really quick. So if it's under the thresholds, do they still report your revenue to the IRS? They do not report the lost ledger. If it's under that 20,200 transactions, No, Whatnot will not report it to the IRS. The IRS expects you to report it at that point. That's where your ethics and your honesty become forefront and center. Yes, both requirements have to be met. Okay, with the accrual method, you run items at random. How do you recommend to really keep up with your inventory and shipping related to what you've sold? Great question. For your inventory, you only need to know 4 things. And you really, out of those 4, you really only need to know 3 because it's a simple math formula. You can always get whatever you're missing. I need to know where I started. What's my starting inventory as of January 1st? Okay. If you're brand new to Whatnot, that should be 0. If you are not brand new to Whatnot, that number should be on last year's tax return. What did you add in? That's all your receipts. What did you buy? What did you put in? You should be able to get that number. What did you sell? This is the number that's tricky, right? And then what's your ending inventory? Your ending, you should be able to walk through your wherever you store your inventory and be able to value it. You should know, you should have some system where you have an ending inventory. So if I have just 3 of these, I can back into my last to what I sold. In my inventory PDF, I actually give you the formulas for all of that. It's just subtraction and addition. It's a very simple formula. So you don't actually have to track what you're selling. If you, at the end of the year, you can value what you have, you know what came in, you know where you started, you know what you have, you can figure out what you sold. When you promote yourself, One Georgia Peach, when you promote yourself, when you promote other people, I would argue that that's not an expense. That is just you being nice. When you promote others so the seller will shout you out, that could be marketing. Yes. So if you are buying a promotion in somebody else's show to shout you out, that could be considered marketing because you are buying exposure, right? They're actually saying your name. They're promoting your business. No different than buying your name on a billboard, right? I would question why we do that. I mean, I've sold sponsorships before. Just, I don't know. That's a different topic for a different day. All right. Now you have to, yes, if you are brand new, you guys, if you're brand new to Whatnot, getting a grip on your inventory right from the get-go is probably going to be one of the most beneficial things to you. Everybody talks about when you go into any chat show and a common question is, I'm a new seller. What do I need? What's important? What do I need to get going? Everybody's going to tell you need a thermal printer, you need a scale, a decent phone, right? And a ring light. That's what you're going to hear in every show. You also need to get a grip on your accounting and your inventory. Not many people are going to tell you that. Have a system. It's going to make it so much easier for you. All right, let's do another question. What qualifies a space for the home office deduction? Any room in your house, a dedicated space used only for your business, a shared living room, or a table you sometimes list items on. Yeah, B, you guys, see, you guys all know your tax stuff. You can do your own taxes here. No problem. It is B. So I actually wrote it down. The IRS, the language that they use is regular and exclusive. If it's multiple rooms, that's okay. You can also deduct multiple rooms. If you are using them regularly and exclusively for business, we all use our tables too. I do. I mean, yes, we all do, but we can't count it. So let's just do an example here. If you have a guest bedroom in your house and you have a shelf, a bookcase, say in the guest bedroom, and you store inventory on that bookcase. But throughout the year, Bob comes and visits and Sally and this person, and they stay in your guest room. And the primary use of that room is a guest room. You can't deduct that. Now, if you took that same guest room and you divided it somehow, curtain, piece of furniture, and one side of that guest room was solely for Whatnot. Had your shelves, maybe had a camera. You used it only for Whatnot. Like you set up a space that your guests don't mingle in, that could be deducted. And if it's multiple rooms, just make sure it's not, again, we're not doing a mixed use. I have a basement here. My studio right here is in my basement. And this is fine. On the other side is my gym. I have a table over there. I have a little living area. We have a guest bedroom. I have a bathroom. So we have multiple uses here. This is like where my guests stay. Oh, my husband's trying to show you. There we go. So this is the back. You can see my curtain hanging back there. You see, I have rooms. Okay, so this is all other spaces down here. Okay. I have a curtain though. I have a dedicated area that's just for the business. This is my home office. It's okay if the dog sleeps. We'll forgive the dog. That's the only time the IRS doesn't, they're like, cool with your dog. Have two, one for shows, one for shipping. And Lady Magnolia, absolutely. I have another spot, an unfinished portion of my basement that houses my inventory and my shipping. So, and that's all that's there. I actually moved my Christmas decor and everything out of there so I can make it solely used for my business.
You have a whole room. I'm lucky. I just have a corner.
He has a corner. I stick him in the corner. Do you just measure square footage? I use 3 rooms. Yes, you just measure square footage. Now, I'm not going to get into all the specifics of it, but there are 2 ways to account for your home office. You can use your actual, where you're measuring square footage. You're calculating the exact amount of the utilities used for those rooms, because all of these rooms have electric, maybe gas, heat, whatever it may be. So you can use actual, or you can use a simplified method. So the IRS says, you know what, we know using the actual could be kind of taxing. We're going to give you an easy simplified method. To do simplified, they allow you 300 square feet. Said and done, you get 300. You don't have to add in all your other stuff. This is what we're going to give you. A lot of people choose that. That's usually beneficial for most. Again, you need to weigh one against the other to see which works best for you. Okay. What if you bought your supplies and some inventory in 2025, but plan to start selling in January 2026? Can you deduct it? Absolutely. The boutique, your inventory, no. Your inventory, I will not deduct in 2025. But the supplies are immediate expense. So if you bought tape and boxes and some bubble wrap, some shelves, maybe a camera, whatever it is, you can absolutely deduct those in 2025. Now, this is kind of like we can massage this a little bit depending on when you bought it in 2025. If it's like November, December, because you know you're going to start a business in January, I would just put it on the 2026 return. Talk to your CPA or accountant about this. So just kind of depending on when those purchases were made. Now, technically, they might say, no, it's 2025, but it's kind of a gray area that you can massage a bit. Internet or phone, a separate expense from the space allowance of 3,000 square foot. Those would be separate. So the internet and the phone are separate expenses. And again, those are the portion that is used for the business. I have one cell phone. Most of us have one cell phone. I have one cell phone, but I use it for business. Well, my husband's cell phone. I have my phone. I'm always on my phone. I'm looking at auctions. I'm sourcing. I'm using my phone for business. I also use it to talk to my kid's school, to keep tabs on my kid, to talk to her, to talk to my adult children, to my 9-to-5 job. I use it for that. So you have to look at what is realistic. Like, do you use 20% of that phone for business? Is it 50%? I go back to what I said before. Whatever it is, there's no right or wrong percentage, but whatever percentage should be realistic, and you should be able to look an IRS auditor in the eye and be able to defend your decision honestly with no guilt, and be able to legit say, no, I use my phone 20% for Whatnot Business because of this, and be able to explain it. You don't have to put that on your tax return, but when you're making that decision, that's something you should be thinking about. Are people who run... Oh, thank you, Crystals. Thank you very much for answering that. But I'll still... Are people who run gift chats double dipping? Someone else pays for the gift card, and then they treat it as an expense when they purchase the gift card. Yes, but they also get the income, so they're not really double dipping. So if I'm doing a gift to chat, I've already bought that. That's an expense, that gift card, and then somebody has to pay me for it, so I get revenue too. So they're not really double dipping. Okay. Becomes an expense. Yep. Okay. Let's do another. I'm going to do another giveaway here. Speaking of those, let's do our next question. What are we on? If someone gives you inventory for free, you have a friend that is just so generous, what is your cost of goods? Is it retail value? Whatever you think it's worth? 0 unless you paid for it, or only what you sold it for? We've got 2 C's. Anybody disagree with those C's? Looks like we're all in agreement, and it is Thank you so much, Scrap Spazzy. That was so sweet of you. It is C. That's your basis. That's the value. If I went to Goodwill and I bought it for $2.99, that's my basis. If my best friend says, you know what, I know you can make a lot of money on this. Here you go. Your basis is zero. You didn't pay for it. Now, if you gave your friend $5 for it, your basis is $5. But yes, so we're all on the same page with that one. Gifted inventory is zero. Now, there's different rules for inherited inventory. So if grandma passes away and you get all her china that now you want to sell, there are different rules and things like that. There's a stepped up basis. So it's too much to go into now, but there are ways to create what the cost value is on inherited inventory. That's just handled differently. I didn't keep records of the price per item or quantity of purchased inventory. How will I make that up for inventory? Wildflowers for the table. While you didn't keep records of price per item or like average item, I am assuming that wherever you bought your inventory from, whether it be auction, Goodwill, thrift store, estate sales, that you have some type of a receipt. Estate sale, garage sale, you can write your own receipt when you buy it. Yep. So there you go. That's your additions. You just take that full number. That's your additions. We go back to you need your beginning inventory, what came in, what went out, and what's the ending. So what came in is the total. Even if you don't know price per piece, you know the total that came in. So you're going to use that. All right, let's do another question. If you sell on multiple platforms, how do you report income? Only report the platform with the highest sales. Only report platforms that send you a 1099. Add all of it together and report everything, or you don't have to report it if it's under $600. C. All right. Yep. You guys are experts. You are all honest people. You spend too much, but you have receipts. There you go. It's their expenses. Okay. Yes. All income. You add it all together. They have made a change this year recently. So last year, some of us may have got a 1099 from PayPal and from Whatnot that showed the same income. And then we had to do this little trick where we back some of that out. Cash sales. You do have to report cash sales also. Yes, you have to report cash sales, as hard as it may be. So yes, it's all sales. Yes, boo. Unfortunately, I can't tell you what you do. I can't. If I don't see it, I don't know about it. But I can't. As a CPA, I have to say that we report all of our income. So you add it all together. But this year it should be easier with the higher limits, with the 20,000 and the 200. Hopefully, we won't be getting as many duplicate 1099Ks. On paper, keep up with each. Yes. Okay. So you guys are perfect. Let's see. Let's do another one. Let's do another question. I have about 15 more minutes before I have to go. So if you guys have questions, pop them in there. If you refund a customer, what happens tax-wise? Annette, I see your question. I'll get right to that. So if you refund somebody, you still owe tax on that sale. You reduce your income by the refunded amount. You deduct the inventory twice, or nothing happens at all if you have to give somebody a refund. All right. You guys know it is B. Yes, you just deduct it. It's money that came in and money that went out. There is actually on your Schedule C, there it says sales and then it says refunds. But the IRS knows this happens. They actually put a line on that tax return that asks you, did you have to refund anybody? And as part of the formula when you're filling out your tax return, it will deduct that out of there. All right, let's see. Annette said, you're not dumb. I keep forgetting to keep up with all of what I bought from Whatnot for inventory. Is it okay to? No, go back and look. I wouldn't estimate. You go back, you can look at, yeah, I mean, if you cannot find it on Whatnot, you should be able to, but if you can't find it on Whatnot, whatever card you paid with, bank statement or credit card, you can always go to that and accumulate what you purchased. And Joey, you got that giveaway. Congratulations. Let me start another
Congratulations.
one. Okay. How long does Whatnot keep records of your sales? Well, let's say I've been on Whatnot for 2 years, and I know I can go back and look at all of since I started. I don't know if it's in detail, but I know that under the reports in your Seller Hub, that I could get a report at least with some totals. I don't know how detailed it is. Other than that, I would not know. That's a question I would have to look up. Can you not print that information out? I'm sure, hope we can. Oh yes, we should be able to print it from Whatnot, from the buyer side or the seller side. White Oak, what are you? Where is White Oak? Here we go, White Oak. The Whatnot fees, are they reported to us at the end of the year? They will be on the, you can actually see them monthly, and it may even be, I think Southern Charm told me they have weekly reports now too. If you go to your Seller Hub and look under the finances, I want to say, you can get a report that shows you, I know for sure monthly, but it may even be weekly. And it'll tell you your gross sales, your fees. It kind of breaks it all down for you. Wildflower says, so it's not a specific tax record of quantity of items in inventory, but rather the general dollar spent. I've only done cash method, not inventory. Correct. The IRS can care less if you have one item that's $1,000 or if you have 100 items that equal $1,000. They just want to know the value. That's all you need to know is the value of that inventory. And then it's up to you to figure out how to keep those records, how to account for that. You may have answered, but the 22,000 threshold is that sales earnings. So it's 20,000 in sales, gross sales, and 200 transactions. So if you've met both of those together, you will get a 1099K from every single platform. So maybe you made over 20,000 on Whatnot and over the 200 transactions. So Whatnot sends you a 1099K, but maybe you're also on eBay and you didn't meet the threshold. eBay will not send you a 1099K. You still have to add both of the income together when you report on your taxes. So it's per platform. This is a big relief, and it is an asset value for the amount which may sell or simply what I pay. Okay, hold on. Let me read this again to make sure I'm understanding. Okay, and is the asset value the amount it will sell for or something? What you paid for it. It's simply what you paid for it. So you are recording your inventory at the price of that inventory, plus if you had to pay shipping for it, plus if you paid any taxes on it, plus if you paid any improvements to it. Can we deduct the time you're selling and are doing a seller support show on Whatnot? No. And this, Amy, you've hit on one of my other hot topic soapbox items here. Your time means nothing, and I say that in the most polite and respectful way I possibly can. My time means nothing to the IRS, okay? The IRS can care less if you spend 300 hours a week trying to sell your stuff, or if you spend an hour a week. Your time is meaningless to the IRS. To you, it's valuable. To me, it's valuable. However, there is nowhere on your books, unless you are actually doing payroll, legit payroll where you're paying payroll taxes. There is nowhere that you are keeping track of your time on your books. There's no value associated with that for accounting purposes, unless you are legit doing a full payroll. We're not talking about that. Most of us are sole proprietors and we're not doing a payroll. So it doesn't mean anything. This also plays into when you're valuing your items. I'm not going to go too deep into this. When you're valuing your items and people say, well, my time, know your worth, know your time. Your time's worth something in the value of your items. It is not. It is not. There is nothing. You know what the value of that item is? What you paid for it, what the shipping was to get it to you, and what you paid on taxes. That's the value of that item. The value is not the time it took you to source it, the time it took you to buy it. None of that is a part of the value of your item. How do you keep up with yard sale inventory we pay cash for? The polished picker, all you have to do is keep a record yourself, keep some type of logbook, whether it's an Excel sheet, a little notebook, anything, any way for you to keep track. I would put the date, put like garage sale or estate sale, and a general description of what you bought. You don't need to put every little piece, but you can put, picked up some collectible pottery, picked up some china, miscellaneous household items, something like that. Do we need address? No, I wouldn't even put the address. If you want to put the city to help you remember, Thrifted Couture, you got that giveaway. I can do another one. I still have time here.
Congratulations.
Yeah, I wouldn't put the address. It may be the city in case your question. You could be like, oh yeah, I often go to blah 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 city for they have great yard sales. You know, can I write off the sales tax with the yes, you can absolutely. Your sales tax. Oh wait, hold on. Let me read the first question. So I just started in October, but purchase items from July to current for my shop. Okay, currently still paying sales tax upon purchase. That's fine. Yep, and your sales tax it's part of the cost of that item. Absolutely. So when I say when the sales tax is part, let me just break it down a legit example. I buy a mouse for $5. I'm charged 60 cents in sales tax. My cost of goods for this is $5.60. That's what I'm recording as my cost of goods is $5.60. Got it. Cool. Okay. I think we have one more question, honey. Oh, we're right on time. Sunshine, I'll get to you in just a second. What's our last question? I'll answer yours first. So do I understand correctly? If you bought an inventory item on Whatnot, you can deduct the price of the item plus the sales tax. Yes, yes, Sunshine, absolutely. Now, this is why you want to fill up your box because then if you bought 10 items and you paid $9.21 shipping, then that is what 92 cents in that you would add on to each item, right? 9.21 divided by 10. So fill up your boxes. Go help your fellow sellers out there. All right, our last question. You had $10,000 in sales. Does that mean you owe tax on $10,000? Yes? No, because the platform collects tax for you? No, you're taxed on profit after expenses and cost of goods, only if you get a 1099-K. Yeah, you guys know this. Yep, always buy more with reduced shipping. Absolutely. All right, it is C. So your basic formula, if you are new to this, it looks like most of you already know this, but the basic formula, we're not done. We're almost done, but we're not quite done. Your gross sales, the dollar amount they paid for, gross sales, minus your cost of goods, that's that inventory we've been talking about, gets you your gross profit. Then you take out all the operating expenses, all the other stuff that you have, your boxes, your labels, your home office, your mileage, all of that comes out till you get down to your net. That net amount is what is your taxable amount. For tax purposes, hopefully that's close to zero. However, I'm going to leave you with this before we go. Let's see, we have 2 minutes. So if there's any more questions, throw them in there. But I've got a couple quick things to say. If you end up paying taxes at the end of the year, taxes are like shipping. I say this every time I have a tax show, but there is a blessing in paying taxes. I know you're all rolling your eyes like, you are crazy, lady. What are you talking about? You only pay taxes if you make money. I only have to ship items if I made sales, right? So be thankful. As much as it sucks, none of us likes to write a check to the IRS. But the only reason we have to write that check is because we made money to begin with. So that's that. See, thank you. I think it's a good idea. It helps lessen the pain of having to write the check to the IRS. Before we go, we do have an announcement. I'm going to tease you guys just a little bit. So let's play this really quick and give you a peek of what's coming. We have, good guess on the charm. We have big plans for 2026. We do have something planned. December 26th at this very chat show, December 26th at 7 a.m. We are going to be announcing it. We're also going to have a really nice giveaway that day, something really cool. So just put that on your calendar, December 26th. Come see us, and we're going to reveal what our private collection is. The Lost Ledger. So you have to create a business entity for your business income in order to not be taxed at your ordinary. No, the Lost Ledger. If you are a sole proprietor, you are taxed the same way you are as an individual. That as a sole proprietor, you fill out a Schedule C that is attached to your 1040, to your individual tax return. You're taxed at the same rates you would be just as if you made money at a W-2 job. So it's the same, it's your personal rates. You can If you choose to create a corporation, if that makes sense for everything in your business, you create a corporation, you file a corporate tax return, you pay tax on that. I missed whoever got that giveaway. The Lost Ledger, you got that giveaway too. Congratulations. So if you create a corporation, you file that tax return, you pay corporate tax, then you're going to get either a dividend statement or a 1099-K, depending on the type of corporation, that then goes on your personal return that you're going to pay personal tax on. So it's almost double taxation if you have a corporation. Almost. That's very simplified. I give you a very, very simplified explanation. So no, you do not need to create a business entity. Thank you so much, Apollo Specker. My husband is very tech savvy. I can barely work our remote control. All right, let's see. Let me just make sure I answered all the questions before we go. I am ending a bit early because I do have a 9 o'clock phone call for my 9-to-5 job. Is offering free shipping a way to pay in taxes to help with what could be owed? Thrifted Couture, you could look at it like that. Yes. Offering free shipping just means that me as a seller is paying all of that shipping cost, which is an expense to me. That expense ultimately reduces my taxable income, right? So if I made $10,000, my cost of goods was $5,000, and then I take off all my other expenses, maybe after free shipping, maybe I've lost money. Maybe I'm at a negative $2,000. So that negative $2,000 is going to offset any other income that I have on my tax return. So yes, in a roundabout way, you are absolutely right. Yep, to bring down the money owed.
Mod Vintage, yes, I'm typing something for you.
Oh, thank you so much, Sunshine Vintage. It's not that I'm so smart; it's that I'm a geek, and I have done. I'm a CPA, and this has been my whole career. So I enjoy this. I was going to say something. The Lost Ledger. One of the things about paying in, like having a loss on your business, this is where I say by getting a CPA, you got to look at the whole picture. It's not just a sole proprietor. It's not just your whatnot business. It's your whatnot business, the money your husband makes, the money you may make at another job, any investments you have, what kind of deductions. Do you own a home? Do you have kids? Do you have one in college? It's like all of these things combined together. Well, we think, oh, here's our whatnot business and here's our personal life. In a lot of areas, that's true. They're two separate things. But when it comes to taxes as a sole proprietor, it's one big picture, and you got to take into consideration all of it, and they affect each other. So a lot of times your business can help you offset taxes in other parts of your life if that's what you need to do. And this is where you guys need to get a planner. You need to get like a financial advisor or a CPA or somebody who can really wrap their head around all of that and help you plan appropriately, because it doesn't look the same for any of us. Thank you. I am a CPA. So I have been licensed now for, goodness, I think I got licensed in 2013. So I've got a few minutes. So a little backstory. I did everything backwards in life. I had my first baby at 17. I got married to my first husband at 23. Did not go to college. I graduated 2 years after my first child was born. So I graduated high school when I was 19 because I took time off to raise her for a bit. Went back, graduated top of my class, got a full paid scholarship to Eastern Michigan University. Could not use it because I could not find affordable housing as a 19-year-old single mother at the time. So I did not go to Eastern Michigan University. Instead, I met a man. I got married when I was 23. That marriage lasted for 20-something years, divorced. In the meantime, when I was 30, after my third kid was born, I decided to go back to school. I decided I was going to get a college degree because I was sick and tired of getting passed over for jobs. I had where I was working at the time, I trained somebody. As soon as he was done being trained, they made him my boss because he had a college degree and I didn't, and it pissed me off, and I decided to go to college. So when I was 30, I went back to school. I started as a freshman in college. I was probably one of the oldest ones there. I was an extreme introvert, very scared. I was barely able to say my name the very first day I had to stand up in class. Had I been closer to the door, I would have quietly snuck out. Anyways, that's a long story.
She hates the camera.
I'm not. We'll get there. So anyways, got my bachelor's degree. At the time I was married to a husband who did not believe in college education. And I don't say this as a sob story. I'm just telling you what my life story here. Very quick. This is the condensed version, Cliff Notes. During my bachelor's degree, I had my youngest son. I started school when he was 3 months old. I would drop him off at daycare where I work my 9 to 5. I would pick him up. I would drive to the college, put him in the nighttime daycare, and do 3 to 4 hours of college. Anyways, got through the bachelor's, decided to do a master's. So went on to do my master's degree in accounting, business accounting and tax. After that, decided that wasn't enough. I wanted to be a CPA. So I spent 2 years studying and sitting for the 4 parts of the CPA exam. And throughout that, had various jobs, got divorced, met my nice, wonderful husband, the man that I should have been with my whole life. But instead, we get to enjoy each other now. So that's it. There you go. That's my whole story, Cliff Notes. Maybe someday we'll go into more detail about that. But you got the gist of it. And with that, we're going to go raid somebody. Y'all have a wonderful weekend. Thank you so much. I know, it took him too long to turn up. What was his problem? All right. Bye, you guys. We're going to go find somebody
Thanks
to
for
raid.
joining us. Have a wonderful rest of your day.
Let's do. I do not recognize any of these people, so we are going to go to Grinch Mom. I recognize her name. Let's go see Grinch Mom.
Honey, what are you doing?